Hi everyone, my guest today is Peter Behncke from Gold Royalty. I heard about you at the Rules Symposium in Boca Raton, Florida. We met there also briefly this year. It was very nice to meet you and talk to you. Full disclosure, I am a shareholder of Gold Royalty, so I am especially happy that Peter had time for us today and he can introduce the company and we can learn a lot. And I hope it has also a lot of value to all of you. So I welcome you.
Yeah, Peter, thank you very much for having me. It's great to see you again after meeting in Florida.
It is my pleasure. So could you please explain us, who are you? What is your background? What is your experience? Why is the team excellent?
Yeah, no, the Gold Royalty team is really punches above its weight class in terms of the pedigree of our executive C-suite and directors. Personally, I come from a financial background, started my career in accountancy. I'm a professional accountant, a CPA, and also a chartered financial analyst. Did auditing and financial advisory work for mining companies through the beginning of my career, pivoted to M&A for a brief stint, and then joined the Gold Royalty team in 2020, shortly after we were founded by David Garofalo, our chairman and CEO, employee 1A, after John Griffith, who is our head of corporate development and in charge of building and growing the portfolio. The rest of our management team has significantly more experience than myself, 20, 30 plus years of experience at some of the largest mining companies in the world. David Garofalo was previously CEO of Goldcorp prior to its merger with Newmont, which was the largest gold merger in history at the time. Before that, he was the CEO of Hudbay, and prior to that, CFO at Agnico Eagle. So really immense pedigree in the mining industry. Similarly, John Griffith, who I mentioned previously, he was head of the metals and mining investment banking team at Bank of America Merrill Lynch, so covering all the largest mining companies in the world, and a lot of connectivity and immense experience and expertise that came with his time in banking. Similarly, Andrew Gubbels, our CFO, was previously the head of metals and mining investment banking at UBS, so another global bank with strong connectivity, strong expertise, and then worked previously in corporate development at Aris Mining, Colombian miner. So that's our C-suite team. Beyond that, we have strong technical expertise on the team with Samuel Ma, who's a professional engineer, previously worked in consulting and wheat and precious metals, so understands the royalty and streaming space extremely well. And Alistair Still, our director of technical services, professional geologist, understands building up these models from the ground up. So strong technical bench strength, strong financial acumen, and incredible connectivity throughout the industry. Our board and management in total have over 400 years of collective experience.
Amazing, amazing numbers. So since when are you part of from the beginning you are, and why were you selected?
I think starting out a company in 2020, we hadn't even written the original royalty agreements, and it's always been about having an entrepreneurial spirit at Gold Royalty, having a flat organization, being able to work cross-functionally across all aspects of the business. And that's something we've all really embodied on the management team, is rolling up our sleeves and trying to build this company. And in the last 3 years, we've gone from no original agreements, writing those original 18 royalties, through 10 M&A or acquisition transactions to now over 200 royalties, looking at $13 million in revenue today, versus no line of sight to any cash flow 3 years ago. So we've done an incredible job, and I think that's a real testament to the team here.
Yes, I agree with you. So we have also beginner investors. Could you please explain us a little bit what does the royalty model mean, and so why royalty?
Yeah, so there's a few aspects of the royalty and streaming business model that make it very attractive. We're not your typical mining company that operates a mine or is building a development project. We're closer to a financial institution. We hold a collection, a portfolio of contracts that give us a right to receive a percentage of revenue or a percentage of production from a collection of different mining projects. What this gives us, or the benefits of this model, is it gives us top line exposure. We only have exposure to that top line percentage of revenue. We do not have exposure to all the operating and capital costs that can erode margins from mining companies. It also allows us to diversify, decreasing risk. We have 200 plus assets, 7 of which are cash flowing, various in development. Even the largest mining companies in the world can have maybe a dozen assets. They can't diversify because of how much human capital has to go into building and operating these assets. The third key benefit of the royalty and streaming model is we have extremely low overheads. As a closer to a financial institution, we have 8 full-time equivalent employees at Gold Royalty. At a mining company, to operate a mine, you need tens of thousands of employees sometimes. So the overheads and the costs associated are much higher. We have that top line exposure and very low fixed costs. As we grow, we wouldn't expect our cost base to increase, just our revenue and hence our cash flow to grow in the future. And the fourth thing I would highlight, the last point, is all of the upside associated in the royalty and streaming model. Mining companies, development companies, they have to invest in the ground. They have to invest in exploration, invest in expansion, build out their operations. For us as a royalty and streaming company, we get all that for free. Once the royalty's on a project, the company may expand the resource, double it, extend the mine life, increase throughput at an operation. We don't have to put in a cent. Once a royalty is on our property, it runs in perpetuity, it's fully bought and paid for, and we get all that upside for free.
I like that. And what makes this company special? What are your key advantages?
I think we've when it comes down to a royalty and streaming company, it's 2 key points. It's the assets first and foremost. It's the portfolio that you're investing in, and 2, the team executing on its strategy of growing the portfolio in a disciplined manner. At Gold Royalty, we've been able to assemble an extremely high quality portfolio, anchor assets on some of the highest quality projects or producing mines within North America, and one of the strongest revenue growth rates and hence cash flow growth rates within the sector, which we think is a real strong catalyst, and from current levels positions us for an immense re-rate as that cash flow comes online over the coming years.
Mm-hmm. Okay. Probably we will touch the financial part later, but is it also true that size matters? So your capital cost is it something? What is your competitive advantage? Can we say that or not yet?
Yeah, I'd say that's closer to where we want to be in the future. If you look at the royalty and streaming sector, it's not a huge universe of companies, and you have select pockets of companies of different size. At Gold Royalty, we're still only 3 years old, initial startup, still in our growth phase, trying to achieve that critical mass and achieve that exceptionally low cost of capital that you mentioned. If you look at the larger companies within the sector, your Franco-Nevadas, Wheaton Precious Metals, Royal Gold, they are great companies, great portfolios, great cash flow, 10, 20, $30 billion in market cap sometimes, and they trade at premium multiples. They trade at 2 and sometimes closer to 3 times net asset value, that being the present value of the cash flows in the portfolio. So they trade at a premium and hence have a lower cost of capital and can redeploy that capital into assets more efficiently. And our vision and what we see is there's a strong opportunity to achieve that scale, consolidate the smaller cap end of the sector. And by doing so, we think that we can garner that premium multiple, and our shareholders will benefit as that re-rate occurs.
Okay. So maybe you covered it, but what is your goal? What is your vision as a company? Is this to grow?
Ultimately, we think we can be the next premium intermediate royalty and streaming company. And the way we view it right now is even the mid-cap royalty and streaming companies are still too small or still too illiquid to really capture the attention of meaningful generalist investors in the USA. In our view, we think that a company needs to be closer to 5 billion in market cap to really catch the attention of those generalist capital flows. And by doing so, getting that institutional investor base to come in meaningful size is going to be one of the strong reasons that that premium multiple is attributed to the next intermediate champion. How we get there, that's a long ways out, and there'll be different transactions or different potential avenues of growth. And I think our original proposition, and we still hold this true, is that consolidation is good for the sector. But we see that as a major opportunity within the space.
So 5 to 10 billion is the first target. And now your market cap is something like 250,
200, yes,
200 million. So there is
Yeah.
some upside. That's what the big players cannot tell about themselves, because they cannot grow as fast as you can. That's an advantage.
Absolutely. Go ahead.
And what are the key royalties for you?
Yeah, so as I mentioned, the key royalties, we've really built this portfolio with a long-term vision, and we've built that foundation on 3 of the 5 largest gold mines in Canada or the USA. Our largest asset, Cornerstone Royalty, is a 3% NSR over the Canadian Malartic complex, specifically the Odyssey underground mine, going to be Canada's largest underground gold mine, and our royalty covers a meaningful portion of the northern half of the project. So that's an asset right now, Canadian Malartic, producing over 700,000 ounces of gold as an open pit operation. As it transitions to underground, and we're expecting it to transition, or Agnico Eagle has disclosed that they're expecting it to transition towards 2028, when it will produce 500,000 to 600,000 ounces of gold as an underground mine. For us, we see a lot of upside there, the potential to increase mining rates through a second shaft in the underground. Only 57% of the known resource is currently incorporated in that mine plan, and they continue to explore it extensively. So a lot of chance to continue to grow that resource. So that cornerstone asset will be producing for 20 plus years, generational project, and that really underpins a significant portion of our value. Similar to Canadian Malartic, the Odyssey underground mine, we also have a royalty over the Côté gold mine, which just achieved commercial production, going to be Canada's 3rd largest gold mine once fully ramped up next year in 2025. And we have a 0.75% top line royalty on the southern portion of the pit, which is the initial phase 1 portion of Côté. Again, this is a 20 plus year mine life, long life project that'll provide that not only the growth over the next few years, but that foundation of long-term cash flow for a very long time. And then our third, say, a flagship North American project is our 1.5% NSR over the Ren underground project at the Carlin complex, the Gold Strike mine complex in Nevada, which is Nevada Gold Mines, a joint venture between Barrick and Newmont, the 2 largest gold mining companies in the world. Their largest producing asset within North America, and the largest gold mining complex in the USA. The Ren project specifically is a high-grade supplemental deposit to the overall complex there, and Barrick is completing advanced engineering studies and looking to publish a pre-feasibility study in 2026, and we'd expect production shortly thereafter. So again, fueling that growth, multi-million ounce deposit with a long mine life as well. So these are assets that are coming online immediately in the case of Côté, and then in Ren and Odyssey really ramping up in the midterm, fueling that growth towards 2028, which is when our portfolio really hits its mature cash flow position.
Okay, and for the beginners, I should mention that these are big names and also huge projects, and big projects tend to give us positive surprises. So the upside is also there. And what did you do in the last 12 months to achieve your goal?
Yeah, in the last 12 months, I think, as I just mentioned, 2028 is when these assets really ramp up, and we really see that step change in our cash flow profile with the likes of Odyssey and Ren really kicking into gear, as well as a few other development stage assets we had in the portfolio that we'd expect cash flow from towards the end of the decade. But the big critique we heard at Gold Royalty was, you're a great development story, but in a higher interest rate environment that we're seeing here, no one's paying for growth. Growth is heavily discounted. We want to see cash flow today, and we'd like to see the cash flow profile of Gold Royalty reflect that, which was something we agreed with. We saw the potential for value creation through enhancing our cash flow multiple. Obviously, it's been frustrating to see the share price do what it's done. But despite that, we've acquired some, again, high quality, long life assets that do bridge that gap and immediately are very accretive to our cash flow per share over the next several years. So to that end, we've acquired 3 assets. It started with the acquisition of the Cozamin royalty, a high-grade copper-silver project in August of 2023. Smaller asset, we invested $7.5 million, and that's a project that's provided just over $1 million in revenue, and also gave us our initial exposure to copper within the portfolio, which is a commodity we're also quite bullish on in addition to gold. We then completed a project financing with a company called Aura Minerals in December of last year. That was a structured finance, including a royalty. We also provided the company a structured loan that allowed us to increase our royalty in the future. And this provides us immediate revenue. It'll be close to $3 million plus in 2024 from this project financing, for an asset that's not set to enter production until early 2025. But through that loan and through the way we've structured the investment, we're getting immediate cash flow from that Borborema transaction. And then most recently, this June, we announced the acquisition of a 100% copper stream over Adriatic Metals' Vares project in Bosnia. So a very attractive, high-grade, low-cost, primarily silver-zinc project, polymetallic in nature, and we acquired our first stream. So this is a right to acquire all of the copper production from the project at a set price. And it, again, is expected to immediately enhance our near-term cash flow profile. The assets sold its initial concentrate and is ramping up towards initial or full rate capacity by the end of this year.
Yeah, that's great. And what is the could you please remind me, what is the life of mine at Vares?
At Vares, is 18 plus years,
18
but that's based on only 13.8 million tons of reserves. There's over 21 million tons of resources before they grow the resource at all. So we see the potential to, again, expand that project and also extend the mine life. So.
Yeah, so multi-decade projects. And
Yes.
so that's great. And I also like copper. So I'm also bullish, long-term bullish. We check the numbers of this particular project, for example. And so what we can find out is that this gives more value. So it was worth buying it. That's fine. But we have one constructive criticism or maybe a learning moment for me, because this also created a stock dilution issue. So could you please teach us or explain us why did you use this method and why not debt financing, for example, or some other method? What is the reason behind this?
Yeah, so to fund the Vares acquisition, we did complete a $30 million bought deal equity financing, which brought in some strong strategic equity holders, fundamental investors into the stock. But it really does speak to the quality of the project and that upside scenario that we view in terms of expansion and exploration potential. Despite the increase in our share issuances, we view this transaction as value enhancing for the company, massively accretive on a near and midterm revenue and cash flow per share basis. And in the fullness of time, we view this as accretive on a NAV per share basis as well. I would note that the funding mix for Vares was a mix of cash and stock, or pardon me, debt and equity. We did draw 15 million on our credit facility to fund this as well. So it was partial equity, partial debt. And that was really to balance what we thought was cost effective, but also the most accretive way of funding the transaction. These types of assets are not always available, and when they are, being able to transact on them quickly is an important part and one of our competitive advantages. As I mentioned at the beginning, we're an entrepreneurial group, and being able to transact quickly with counterparties gives them surety and allows us to be more competitive than some of the larger companies in the space.
Yes, yes, okay. So you are right. I forgot to mention, I'm sorry, that indeed it was the mixed financing.
Mm-hmm.
And yeah, so as I said, I also think that, for example, if a company is doubling the share price, it's a big dilution. But if at the end the value will be triple or quadruple, then per share basis you are fine. So that's the most important thing, and I think the numbers here are fine. So this gives us more value.
No, Peter, it's a good question. And whenever you see a discount to an equity, or in fact, just an increase in the number of shares outstanding of a company, the question has to be asked. But in the case of Vares, we have strong conviction in the technical merits of the asset, and are excited to see that project move forward and deliver. I think where we sit today, and a bit of a tangent from your question, but where we sit today at $1.30, $1.35 per share, it's incredibly frustrating relative to the underlying value of the business. But ultimately, we think this now is a time we've acquired really high quality assets. We see Cote achieving commercial production. We see Vares ramping up. And we think as these assets deliver the cash flow, deliver the results that we've invested in, we will get credit for that future growth, the 20 plus years ahead of it, which right now we feel that growth is really not reflected in our valuation.
It will be picked up for sure. And what are your plans for the next 1 and 2 years? Just the near-term future.
Yeah, I think it's going to be a really exciting time for the company. We've gone from startup mode 2024, generating positive operating cash flow. And through 2025, 2026, we're going to see that cash flow really take a step change up with Borborema entering production, Cote a full year of production, Vares a full year of production, starting to shift to the underground at Odyssey. Cash flow really starts to materialize over the next several years, which starts to give us the opportunity to perpetuate the business, use cash from operations to pay down our debt, decrease interest costs, bolster the treasury, and then look to redeploy that in potential future growth. But again, always keeping in mind pursuing transactions that are accretive on a per share basis and that have a strong, not only a strong base case rate of return, but core to any investment we make is that exploration and expansion upside. Vares, Borborema, Cozamin, these are assets with immense exploration upside. We are not one to just go pursue small scale mine that has 4 years of mine life remaining and then it's capped out. We see the power of the royalty and streaming model really within investing in assets with exploration and expansion upside to benefit from that as a royalty and streaming company, the optionality inherent in these assets.
Yeah, I like the long-term vision because we just have to give time for this project. Also if it's copper, if it's gold, just give more time, and then also the dollar value of these products will increase. I assume, otherwise I cannot expect that we have lights or we have electricity. Or yeah. Okay, so you answered if you would like to buy more, where is the money coming from? I don't have to ask. How do you create value? You touched it briefly, but how do you create value? What is the strategy for further growth? More projects?
Create value for shareholders specifically,
shareholders,
not a holistic theoretical.
Yeah.
No, ultimately it's being disciplined and executing on deals that improve the value of the business on a per share basis, increasing those traditional financial metrics that are going to or are expected to increase the valuation of the company. And in every acquisition we make, we're looking to enhance the the value of the company, improve our cash flow profile, improve the value per share. And I think where we sit today, we have to be very disciplined. We have a strong organic growth pipeline, and we think as that organic growth crystallizes, that could be the potential opportunity for a re-rating in the stock. With that said, we're always looking at opportunities. We're always doing the math to see if an opportunity makes sense. But we've looked at close to 400 different opportunities since we started the company 3 years ago. We've executed on 10. It's a very granular screen, and we only pursue those opportunities where we have strong conviction in the asset quality.
You started with 18 assets, if I
Yes.
remember. Now you have 242?
Mm-hmm. Yes.
242, so that's a huge number. And I would like to navigate to the numbers and expected cash flow. Am I right that this year your revenue is $11 million?
We did have 10 to 11 million, and we provided updated guidance at the middle of the year of 13 to 14 million dollars. So we're still on track for 13 to 14. That's relative to only 5.2 million in total revenue, land agreement proceeds, and interest in 2023. So 160% increase this year. And we see significant growth, as I mentioned, all those assets coming online towards this year and getting a full year benefit next year. We'll see further growth in 2025. We haven't provided our official guidance for next year. We'll likely do so early in 2025. But on a consensus estimate of the 6 analysts on the sell side that cover us, we're approaching $40 million in revenue by 2028, which is when you see those major assets really ramping up.
And I would like to recommend everyone to check your presentation. I will put the link down below. And then if somebody checks this, then I could also read that the expected compounded growth rate is enormous, 60%, around 60% until the end of this decade. Why is it so high?
It's the quality of those assets. It's Canadian Malartic alone is going to be the largest underground gold mine in Canada, and that's a core asset for us, really driving a lot of growth. Those other key development stage assets we've mentioned, and the optionality also inherent in our portfolio. That's not built into the growth rate, but that's something that will continue to fuel growth in future years, that may be assets that we aren't counting on today, but beyond 2030 and into the next decade, there will be those development stage assets that surprise to the upside. And I think that's something that can continue to fuel growth. I'd also note that consensus estimate revenue growth projection is still based on long-term gold price of closer to $2,000 an ounce. It doesn't have gold price upside built into there, and we're extremely bullish on the commodity as well. So yeah, there's several drivers, but all in, we've really assembled a high quality portfolio of assets.
And we should keep in mind that you have over 240 assets, and only a handful is already paying you. So,
yeah, we've got the 7 producing assets, another dozen or so at various stages of development, and that's how the portfolio is really positioned. The majority of value is based on those 24 or so cash flowing or development stage assets, and then the early stage stuff, the resource stage or pre-resource stage projects. Investors effectively get that optionality for free at the current valuation. That's just free upside. And again, these assets run in perpetuity. They're completely bought and paid for. They have no holding cost. They're just free optionality for us on those different parcels of land.
Huge upside. Thank you. And what could go wrong?
I think we are still exposed to development risk, operational risk. It is mining at the end of the day. It's not a risk-free industry, but that's significantly mitigated given the diversification across the portfolio. This isn't a single asset company living and dying by a drill hole, or having one potential issue cripple the company. Of course, we want to see all of our portfolio assets perform well and deliver for the company, but none are going to sink the ship, per se.
Yeah, it's a good way of saying that. Thank you. And I see our time is limited. Before we wrap up, could you tell me a few things I did not ask, since you know the company better than I do?
There's two things maybe I potentially missed. I think one thing we always like to highlight in terms of the optionality is just how much exploration is being conducted across the portfolio. And we've seen over 2 million meters of drilling the last 4 years. So over 500,000 meters a day. That's hundreds of millions of dollars a year being invested into the projects. And that's not something we benefit from immediately. It's not immediate cash flow. You don't see it up front, but that's a lot of capital to de-risk and advance these projects, which we'll benefit from in future years. It takes decades to go from discovery to building a mine, and that capital is being put into our portfolio currently.
Okay, and what was the other one? Or that was
Oh, the other point I wanted to raise in terms of your question on how do we continue to grow is earlier this year we did enter a strategic agreement with a group called Taurus Mining Royalty Fund, a private equity group, project financing group based out of Australia and London. And through that partnership, they've raised significant capital within that fund. We're going to look at co-investing in opportunities. So precious metals asset opportunities north of $30 million. We'll share with them, they'll share those opportunities with us, and we'll have the chance to invest on a 25 to 50% interest into the royalty. So this not only helps us source more opportunities to evaluate, but it also gives us more capital firepower. So when you inquired on how will we fund these things, we can take a smaller stake in a potentially larger royalty with Taurus coming in for a larger position. It allows us to hunt for larger, higher quality assets as opposed to potentially smaller, more marginal projects.
Okay, okay. Thank you very much. I could talk to you hours, but I have to say goodbye. Thank you for having time for us. And the rest of the information I will put down below, so everyone can find it. Thank you very much for being here.
Yeah, thank you, Peter. Really appreciate the time. And anyone can always reach the company directly as well, info@goldroyalty.com. Typically, I try to respond quite quickly. But again, thank you very much, Peter.
Thank you. Thank you for being here. Goodbye.